Hey folks, have you seen the latest results from the Duckhorn Portfolio? As a wine lover, I'm always interested in how premium wine companies are performing.
I just skimmed through it. The numbers look mixed to me. What caught your eye?
Indeed, there are some interesting points to unpack here. Let's dive in, shall we?
Well, I noticed their net sales for Q4 increased by 7% to $107 million. That seems positive, right?
At first glance, yes. However, we need to consider that this growth includes their acquisition of Sonoma-Cutrer. If we exclude that, their net sales actually declined by 14% compared to last year.
Wow, that's quite a difference. What's causing that decline?
A key factor was the shift in timing of their Costa Brown Appellation Series release. It moved from Q4 in fiscal 2023 to Q3 in fiscal 2024. This highlights the importance of looking beyond headline numbers and understanding the nuances of a company's business cycle.
Interesting. As a wine enthusiast, I know Costa Brown is a highly regarded brand. Does this shift signify any changes in their strategy?
Not necessarily. It's more likely a matter of optimal timing for the release. However, it does show how dependent their quarterly results can be on the timing of specific product releases.
I see. What about their profitability? The gross profit margin seems to have decreased quite a bit.
You're right. Their Q4 gross profit margin dropped from 55% last year to 49% this year. Even their adjusted gross profit margin, which excludes certain items, fell from 55% to 51%.
That's significant. What's driving that decline?
There are a few factors at play. The inclusion of Sonoma-Cutrer, which primarily produces white wines that typically sell at lower price points than reds, has impacted their overall margin. Additionally, they mentioned a return to more normalized trade spend, which suggests they may have reduced promotional activities that were boosting margins in the previous year.
I noticed their adjusted EBITDA increased, though. Isn't that a good sign?
Yes, their Q4 adjusted EBITDA increased by 16.7% to $40 million, and the margin improved by about 300 basis points to 37.2%. This suggests they're managing their operating expenses well, despite the pressure on gross margins.
I'm curious about their brand portfolio. Any insights there?
The acquisition of Sonoma-Cutrer is a significant move. It's a well-known brand, particularly for Chardonnay. This acquisition expands their presence in white wines and could help balance their portfolio, which has been traditionally strong in reds.
Speaking of balance, what about their debt situation? I always worry about companies taking on too much debt for acquisitions.
Good question. As of July 31st, 2024, their leverage ratio was 2x net debt to trailing 12 months adjusted EBITDA. This is generally considered manageable, but it's something to keep an eye on, especially if we enter a more challenging economic environment.
How do you think these results might impact their strategy going forward?
Based on the CEO's comments, it seems they're focusing on integrating Sonoma-Cutrer and executing their existing strategic initiatives. They appear confident that this positions them for solid growth and profitability in fiscal 2025 and beyond.
What would you be watching closely in the coming quarters?
I'd be looking at how well they integrate Sonoma-Cutrer, whether they can improve their gross margins, and how their different brands perform across various price points. The wine industry can be sensitive to economic conditions, so I'd also be watching for any signs of changing consumer behavior.
This has been really insightful. It's fascinating to see how a passion of mine, wine, translates into such complex business dynamics.
Agreed. It's given me a lot to think about in terms of my investment strategy.
Indeed. The wine industry, particularly in the premium segment, offers unique challenges and opportunities. It'll be interesting to see how Duckhorn navigates these in the coming year.